So I made a video about this particular stock and now it's up over 30% since that video. Hey guys, welcome back to Fiscal Voyage. My name is Felix, and in this video I'm going to talk about Store Capital stock. Store Capital, I actually made a video about it sometime in July, and since that video the company is 30% higher, and they recently announced a dividend increase of about 3%. So in this video we're going to determine if Store Capital is a good buy still at current prices. And also make sure look at the suggestion note here, and to check out that previous video where I go more in detail of this stock. But before we get started with the current price for Store Capital, if you're new to the channel, make sure to hit that subscribe button and check out my free ebook in the description below. 5 quick metrics to look for before spending hours in research any particular company. So you can see here I made a video on Store Capital on July 24th, 2020. At that time, July 23rd, the company had a share price of $22.45. I had a fair price based on my estimates at $27.80, meaning that the company was undervalued by 23.8%. And of course, just because of these estimates are undervalued, fair price, doesn't mean I give always a buy recommendation. I always look at all the other criteria: dividend, payout ratio, revenue growth, net income growth, the S&P credit rating. So I look a lot more before I actually make my decision, even if the company is undervalued based on these estimates. So I had a buy suggestion or recommendation at that time period, and since then, at 7/23, the company on July 23rd, the company has been up 31%, and it's up almost 4% today, as you can see here. So it's up 31% since that last video I created. And let's look at the current fast graph of this company. And the company actually, first let's look at the Store Capital declares a 0.36 cents dividend, which is an increase of 2.9% versus the prior 0.35 cents in dividend. So this is great, with all the retail stores closed, and people stop paying rent and things of that nature because of the economic shutdown, because of the situation. Not only has this company been able to pay out its dividend, but as of today, it increased the dividend by 3%, which is outstanding. So right now the company has a dividend yield of about 5%, which actually is going to be lower, a little bit lower. It's going to probably be like 4.8 or 4.7 because of the 4% increase today in share price. But still, the dividend is very nice yield. It's not as great as it was over here, because I think in this time period when I made the video, the dividend was 6.10%. So that was a great deal there at 6.10% dividend yield, with the huge capital appreciation, almost 25%, I think it was. What was it? The 23rd, it was 30% increase in capital. So let's look at the fast graph to determine if it's fairly valued or still undervalued and still makes a good buying opportunity. So here's the fast graph of the company. You can see earnings or free cash flow has been growing very nicely, 7% in 2015, 10%, 4%, 8%. But this year, 2020, of course, with the economic shutdown and all the things going on, 8% decrease from 199 in 2019 to 184 for the end of this year. That's what analysts are estimating, but picking right back up at 5% and then 5%. So that's very good there. However, you can see here, based on the long-term graph, the company tends to be fairly valued at around a multiple of 15. And we can see there that right now the company has a multiple of 15.10. So it's right there at fairly valued based on the long-term graph. But if we shorten this, because the growth here is estimated to be 4.85, if we shorten this, the growth now based on recent years and current estimates is about 2.5. So based on this, of course, the slower growth presents, you know, the earnings growth to be quite flat here. So this is one of the important things to consider before using fast graph is, you know, look at the history as well as, you know, a shorter time frame, because these numbers changes based on the numbers of the years here. And you can see here is right on fairly valued. Before the start of 2020, the company had a PE around 17 to 18 and as high as 20.5. So that was fairly high PE, and right now it has a PE of around 15. So the company is fairly valued. I think the company is a good buy. You know, if I didn't have shares of this company, I think now it's, you know, it would be a nice buy. But I did buy shares. I bought around $17, I think earlier in March or something like that. And I'm up almost 70% here currently. But right now, you know, I don't plan to add shares, but if someone is interested in this company, I think right now is, you know, is a decent buying opportunity. I wouldn't go all in because it's fairly valued, but the dividend is very well covered, as you can see here. And of course, the most recent increase, 3%, that just was announced earlier today. So that's very positive news. But the dividend or the current price is fairly valued. And if the company were to revert back a normal multiple of 17, you have a nice total annual rate of return, about 13.4% for the next year or two. So that's you know, that's a nice return. Not as if you were to buy it at $23 when I had it before, you had a total annual return of about 20%. But currently, it's not a great buy, but it is a decent buy at current prices. Let's look at forecasting. Analysts for the next long-term 3 to 5 years are expecting earnings growth to be around 4%. So we could see, you know, a nice total annual rate of return of about 10% here. So overall, the company does look good. And like I said, it's fairly valued currently. It has a nice credit rating of BBB. Long-term debt to cap is decent at 46%. And a blended adjusted free cash flow to yield at 6.62. You know, it's nice. I like to see this at 6.5 or higher. The dividend yield is very nice, but of course, with today's increase of about 4%, this dividend is going to be slightly lower, probably about 4.7 or 4.6. So there you have it. The company Store Capital stock looks fairly valued now. It's a decent buy. I wouldn't go all in at current prices. I'll probably look for a 10 to 15% drop in price. Maybe it happens, who knows? But right now is a fairly decent buy right now. Again, don't go all in. There's my potential for a price drop about 10% or so. But definitely this stock was very good buy when I last made that video. You know, the company's been growing dividends for 5 consecutive years and has a decent payout ratio of only 76%. So I think next year they're might increase the dividend much more substantially, because REITs are, you know, by the regulation are supposed to pay out about 90% of their net income. But overall, Store Capital has been doing great. I'm very happy with my current position. It's a real estate REIT that is definitely should be in your portfolio. Again, right now is a good price. It's not a great price, but it is a decent price right now with a nice dividend yield. So thank you for watching. Again, if you're new to the channel, make sure to hit that subscribe button and check out my free ebook in the description below. And I'll see you guys in the next video.